So this is going to be part one of fair value gaps. So we're going to do two parts of the series. One kind of explaining what they are, how you can mark them in the charts, how we can spot them, all that good stuff. And then we can also do on executions on how we can start build using all the building blocks we have, right? We have uh, we have candlesticks, the wicks, the bodies. We got highs and lows and trends. So how we can use understanding of candlesticks to implement highs and lows and trends in the market. And then we also have break of structure. So you have to understand candlesticks to understand highs and lows. You have to understand candlesticks, highs and lows and trends to understand break of structure. So we're doing all these things. They all combine. They all come together. I'm not just throwing a bunch of random trading knowledge at you. You kind of need to understand the stuff to you understand it to know what's going on, right? So we're going to start with fair value gaps. So in implementing fair value gaps, FVGs, that's how I'm going to be, referencing them. There are imbalances left in one direction within the market. So I'll draw it out, of course. So let's say this is going to be an up candle. I'm not necessarily going to say it's a green candle because some people use different colored candlesticks. I don't really care what color candlesticks you use. So we have an up candle left here. We have another larger up candle left right here, and then we'll have one more right here. So a fair value gap is that gap you see right here. So, whoops, is this gap you can see right here. This is the fair value gap. So the imbalance left within the market. So these are all up candles that I drew here, right here. And you can see that there are imbalances left to the upside, right? So we have a ton of imbalance left up there. So that's literally what a fair value gap is. It takes 2 seconds to mark out. So, but fair value gaps can tell us quite a bit. Now, I know there's a lot of people that trade based off fair value gaps. I'm not a big fan of them. I'm not a big fan of taking trades off of them. I'm a fan of fair value gaps because they can give us a lot of information on how the market's moving. I am not a fan of taking trades off of like closures above or below fair value gaps. And I'll show you good examples. I can see some right in here. But basically, fair value gaps can show us where one price wants to draw to, because if there's a fair value gap, if there's an imbalance, market will always want to fill it in. And two, fair value gaps can help us with entries if you kind of want to implement that within your strategy. So first, we have to work on marking these out. So there are three candles, right? There is a one candle, there's the main body of the candle, which is where the fair value gap is going to lie, and then there's the top candle. So we have a million examples of this on every single time frame, on the daily, on the 4 hour, the hourly, the 5 minute, the 1 minute, the 15 second, whatever the time frame you're trading on. It's there. There is an imbalance left there. So if we go ahead and take out our little rectangle and our magnet, we can mark bam, bam. This is literally a fair value gap right here. We have this up candle, we have an imbalance between these two candles, and bam, we have the fair value gap line right here. So kind of going over what not a fair value gap is when there's no space there, right? So like if we try to mark out this fair value gap, okay, we have an imbalance here, but then the top wick of the bottom candles over here, and then right, like that's not an imbalance. Kind of looks like it, but this wick comes all the way up here. It crosses in between these. So this would not fit the definition of a fair value gap. Well, this is a fair value gap right here. We have a perfect example of one right here. Right here, we have this wick right here, the top wick, and then the main body of it right here. This fits perfectly with what a fair value gap is. So if we mark out these fair value gaps on the hourly time frame especially, we can see price wants to fill these in, and it wants to fill it in fairly quickly. So we have a good example of one right here that got generated on the hourly time frame. This was at the end of New York session, and we'll just see London session the very next day, literally filled it in right away. And then on the contrary, right here, we see this fair value gap get generated. This big bearish one, what happened? Price completely filled it in. Now, it doesn't need to get filled in with green candles. It doesn't need to be completely like stuffed like this one. It just needs to get ripped through, pretty much. That's filling it in. So like this would fit the perfect definition of filling in a fair value gap, right? Price just ripped through it. It's basically irrelevant to this point, right? It's already been filled in. Yeah, we can show there was a lot of bearish momentum here, but it's none, right? This is kind of irrelevant, but it's good for charting out and showing, what a fair value gap is. So, oh baby, we get a lot of price movement to the downside here now, finally. But like I said, you can mark these out on every single time frame, on the 5 minute, on the 1 minute, on the hourly, on the 4 hour, all those time frames that you need to understand, you can see them. So like I said, this is kind of a perfect time to implement fair value gaps because we've understood what break of structure is, we understood what candlesticks are and trends, so you kind of need to know all that stuff to understand what a fair value gap is. So, um, kind of why they're important. They show draws of liquidity, a magnet for price, right? Price wants to fill these in and are rarely left unfilled. So you will really never see a fair value gap that's not filled in, especially on the larger time frames. On the smaller time frames, you might, but if you scale back onto these smaller time frame on these larger time frames, you'll rarely ever see these. So like we see here, we have a good one right here. Bam is basically filled in, right? So I'll mark it out obviously to give you guys good visuals. We have this bearish fair value gap right here. Bam, it got filled in. And also for these fair value gaps, they don't have to all be 3 candles in a row of all 3 up, all 3 down candles, right? You can have this one, perfect example. We do have an up candle right here, and then we have a down candle, but this still fits the picture of a fair value gap because these wicks don't intertwine, right? They don't crash into each other. Like it would not be a fair value gap if I'll get the brush up. It wouldn't be a fair value gap if, the wicks cross like this, right? So if we have the wicks extend right there like that, oopsies, that's the wrong thing. But if we have the wicks extended like that, right, we see how they cross each other. That wouldn't fit the picture of a fair value gap. So fair value gaps are magnets for price. Price wants to fill these in. On the next video, I will go over how we can take trades off of them. There are a couple ways you can take a trade off of them, but if they're not super, I don't like them. It's not a strong enough confluence for me. It's kind of like one of my last confluences I think of before executing a trade, and I really ever use that. So that's basically it for fair value gaps part 1.